Order filled. Order submitted. Order submitted. Order submitted. Order canceled. Order filled. Order submitted. Order canceled. Order submitted. Order canceled. Order filled. Order submitted. Order canceled. Order submitted. Order filled. Order filled.
Shop Grainger. Talk shop for your shop. 1 million industrial-grade products backed by 24/7 customer support.
Order filled. Order submitted. Order filled. Order submitted. Order cancelled. Order filled. Order submitted. Order filled. Order submitted. Order submitted. Order submitted. Order filled. Order submitted. Order filled. Order submitted. Order filled. Order filled.
Order filled.
Order submitted. Order submitted. Order submitted. Order submitted. Order filled.
Order filled. Order filled.
Order filled. Order submitted. Order filled. Order submitted. Order filled.
much time Exxon had to spend on whatever that was, that ridiculous engine. Carl Icahn made an interesting point. Says there can be no activists because the proxy firms and the ISS, they basically make it much more difficult for an activist to replace a board. So it's actually a bad thing for corporate governance to do it. Do you have a feeling on whether these companies should be reined in, whether a BlackRock should be able to vote in an ETF, vote the shares one way or another based on what the CEO of BlackRock is thinking?
Yeah, Joe, we believe the proxy advisory system is ripe for reform. And has been. And
what kind of reform? That's all, Andrew. You want to do conflict, right?
So I want to get rid of the, okay, I'll tell you what, I want to get rid of the conflicts for the ISS Glass-Lewis, and that seems absurd, seems so blatant on its face. Why that's even allowed makes no sense to me. I do think that if Becky or Joe or I want to vote my own shares that I own in an S&P 500 or ETF, that's fine. If I don't vote my share, and this is where we were debating it, I think I'm okay with, because I think most Americans actually will not vote at all, and therefore that's a vote for management. I think I'm okay with having a Vanguard or BlackRock or somebody like that vote my shares for me, because for the most part, I don't have the resources, time, energy, or other to actually look through the 20 proposals for the 500 companies that are in the S&P 500 all year long. Otherwise, I wouldn't be able to do it. And I would, as I said to Joe, you use an agent when you have a contract with someone. People use a lawyer. I would want somebody to be looking out for my interests.
Mike, I'm with you. I'm voting with you. You do what you think is best.
Mike, what do you think?
Yeah, do what you think is best.
We haven't weighed in with an opinion on how shares should be voted through the passive funds. They're creating vehicles that allow people to vote their own shares through those. And if they choose not to, I think that's an issue that still needs some discussion. But the point you make is people buy companies based on their assets, but also based on their management and the trust they have in management. We engage with shareholders all the time. I'll be doing that all week while I'm here. We sit down with shareholders on a regular basis. We value their input. We engage with them.
People who make a concerted decision to buy an individual stock are doing that for a reason. And those people should obviously be able to vote their shares however they want. I think the question is, for better or worse, we've created an ecosystem now where most people are buying their shares not because they're deciding they want Chevron over Exxon or something like that. They're saying, I just want energy, if that's the ETF, or I want everything, and I'm just going to close my eyes and go.
Yeah, but somebody made the point in X on this, that you don't vote in a primary. It doesn't mean that the boss of the party gets to vote your way either.
Yeah, that's right. I think that's a discussion that still needs to unfold. I'm sure you'll have Larry in here to talk about this.
Right.
And
probably not.
But look, the proxy advisory system is broken. Yeah. And on the one hand, you can have ISS recommending something to your shareholder, and then the other side of ISS saying, well, we'll consult with you, and maybe you'll get a different...
That to me is just that to me is like the lowest of the hanging fruit, because it's just so it's so broken. It's such a disgrace. I don't think there's anybody out there that objects to this, except for probably people who work at ISS and Glass-Lewis.
I think you're right.
Mike, very quickly, the Leviathan gas field, I know we're waiting for an answer on where that goes. Are you still waiting to hear whether Israel is going to allow you to export to Egypt with that?
Yeah, we're moving that project towards a final investment decision. This is a very large gas field that supplies almost all the gas into the Israel economy, a lot of gas to Jordan, a lot of gas to Egypt, which increasingly needs more and more gas. We're looking at an expansion there. We're working with the government of Israel on an export permit. There are a couple of terms that are still in discussion. We believe we'll work through that, but we need to get a satisfactory export permit in order to take that final investment decision.
And you're a CEO, powerful, but are you still on the bag for your wife at these tournaments? Or?
I still have another job that is.
Does she let you read putts, or does she just say carry them?
I read putts and do math on yardages, and
you do?
She makes the rest of the decisions.
Does she take your word for putts, or
she'll double check me? Trust but verify, Joe.
Engineering and math work. Mike Wirth, thank you very much for joining us today. Chevron's chairman and CEO. We appreciate it, and we'll be looking for more. Thank you.
Coming up on the other side of this, changing ownership culture, KKR's co-head of global private equity, Pete Stavros, is going to be joining us to talk about his mission to take employee ownership global with equity sharing programs and a lot more. He's going to join us next. And feeding the demand for AI chips, this is the conversation we were just having with Mike here. AMD CEO Lisa Su telling analysts about a surge in growth. She's going to join us right here on the set this morning, 8:10 a.m. Eastern Time. So much going on Squawk. Do not go anywhere.
That guard dog sure is lucky he has SimpliSafe with proactive monitoring.
Stop. This is SimpliSafe. Police are on the way.
Must be nice.
SimpliSafe. Real security stops crime before it starts.
CMOs, CEOs, listen up. 81% of commerce happens in the real world, not online. Your 2026 plan.
Good morning.
World strategy. AI.
Market is just chop right now. But still short, but it might go long later.
Every touch point into a direct-to-consumer funnel. Scan now for the 2026 big-ass CMO growth plan. Flowcode. Instantly connect fans to your brand.
Did you know that your life insurance policy is an asset that you can sell? Hi, I'm Jay Jackson. I'm the CEO of Abacus Life, and for almost 20 years, we've been purchasing life insurance policies from seniors just like you. In fact, you can use the free policy value calculator at abacuspace.com.
SubSK.
You can learn what your policy might be worth. There are no fees and no obligations. Get real value
Boring morning.
when you need it with Abacus.
$600 a year. If you're 50 plus, you could save up to that much by switching 2 unlimited lines from big wireless to consumer cellular. So why don't you pick up your phone while I take this hammer and see how we can cut your bill? Call Consumer Cellular.
The FBI calls it house stealing, the latest scam where a cyber thief transfers the title of your home out of your name and steals your hard-earned equity.
It's roughly 60 to 90 days for that person to even figure out that they're the victim of this crime. You start getting foreclosure notices, and you realize you've got 4 mortgages on your house that you didn't even know existed.
Unfortunately, it's on you to protect yourself. You might already be a victim. Check your title status now at HomeTitleLock.com.
Available at Macy's, the fragrance destination.
Find something extraordinary at the Genesis Signature event. Now is the best time to enjoy exclusive offers. Get 0.99% APR on the 2026 Genesis GB80, exclusively at your DFW Genesis retailers.
When you've got multiple parts, but need just one answer,
Wait, how do these things work together?
looks like you can just ask Google.
Welcome back to Squawk Box. Our next guest is on a mission to take the idea of employee ownership global. Here to explain and to discuss the private equity landscape is Pete Stavros. He is the co-head of global private equity at KKR. He could be the founder too if he'd like to be, which has $723 billion in assets under management, of which he oversees $222 billion to be exact. That's a lot of money. Pete's also the founder and chairman of Ownership Works. Good morning to you. So you've been trying to. You know what, before I say anything, explain what this is all about for those who may not know.
Okay.
You've been talking about this publicly for quite a while, but I don't know if everybody is clocking what's happening.
Okay, and thanks for having me. Thanks for the opportunity. Employee ownership is an opportunity to give workers a chance to build wealth and to help companies address some of the problems that they face in the workforce, meaning, as we know, most employees in America don't like their jobs. 70% of employees are not engaged at work. The quit rate in America is out of control. It peaked recently at 40%. So we look at companies all the time where they are replacing their entire front line every 2 to 3 years. So an enormous waste. So employee ownership is an opportunity to help companies build stronger cultures, give employees a reason to stick around, be more engaged, and everybody can win. That's the high-level idea.
But what's the form? What's the form, and how much do you give away in the form of compensation? That is the fundamental question.
Yeah, so this is free and incremental to workers, so they don't invest out of pocket, and it's not a trade. It's not.
This is not restricted stock?
We've done it all sorts of ways.
Okay.
It can be restricted stock, it can be options. What we do is we put a block of ownership in a trust effectively, and the employees participate through the trust. When we sell the company or take it public, that trust is liquidated, and workers either get cash or they get shares of tradable stocks. Let me just give you an example. Ingersoll Rand, a company that we took private years ago. When we took it private, there were 86 employees who had stock, only very senior executives. Culture was a mess, didn't even measure employee engagement, worker safety was a mess. It took 10 years, but everyone became an owner. So there's Ingersoll Rand is public again. There's 20,000 employees with stock ownership. Workers made about $1 billion for themselves. And again, it took 10 years, but the quit rate went down 90%, and the engagement scores went from the 19th percentile.
How much did you have to give out
to
make that happen?
We're generally targeting a year's worth of income for employees if we hit our plan. It's not, while there's no risk to workers, it's not a guarantee.
When you say a year's worth of income, so
if you make $70,000, our goal is for you to earn $70,000 as a free and incremental benefit. That's the goal.
As an add-on?
As an add-on. Not a trade for wages, benefits. We're not taking away 401k and giving you this.
Okay, I'll make it more complicated. Same for senior management?
It's a better deal for workers because we don't put performance triggers on it. So senior management would typically be, like the CEO would have an equity award that's part time-based, just purely retentive, and part performance-based. Workers, we don't do that. It's because it's hard enough to communicate and educate everyone on all this. Many people have never owned stock before, so we make it very simple.
Okay, one of the things that's interesting, though, is because you're in the private equity business, there's effectively only one major liquidity event. You can't get out, unless you can get out earlier.
We get out, we're in together, we're out together. So they ride right alongside KKR. When we go public, if we pay a dividend on the shares, the workers get a dividend. If we go public and our investors get stock, the workers get stock. So Ingersoll Rand, when we took that public, all the workers got tradable shares.
So there is no secondary market for these shares?
No.
I mean, that's one of the things I think we're looking at now, especially in tech, for example, where you have a lot of these companies where
there's no secondary market. Yeah.
And do people look on some kind of computer screen somewhere and see, I own X number of shares and this is the current valuation, and who is determining that valuation as this is all happening?
So it's the same valuation we're using at our board level for our third-party investors, and we do quarterly all-owner meetings. So all the employees get together around the world, and we do a video meeting where we're talking about what's working, what's not working. They have our financials, so we're very transparent about how the company's doing. We're updating the valuation every quarter, and so yes, everyone can track how we're all doing.
This works when you own the company outright. In a club deal, meaning where you and maybe two other firms own a company, does it work in the same way?
It would work in the same way. Yeah, we rarely do that anymore.
Okay.
We're not,
I know the club deals went out of favor a long time ago, but there's still some where there's a bunch of folks invested in the same company.
Yeah, but look, one of the things we're trying to get at, economists will often talk about how real wages have gone up since 1980, 20%, and productivity's gone up 80%. And what everybody's missing is the stock market over that period of time went up 8,000%. So even if we had workers participating in productivity, we'd still have this massive problem. Until we get more people owning, there's really no way to...
And you're thinking mostly as a retention tool.
And an engagement tool. So sometimes people will say, why isn't everybody doing this? This seems so obvious. And the truth is, it's very hard. It's not just you give people shares of stock and suddenly they're happy. You've got to teach them about how the business runs, how they contribute to performance. You got to be transparent with the financials and valuations. There's a lot to it.
Do you see this is perfect for you today? Share the wealth. It's in the journal opinion. Share the wealth. Don't redistribute it. Workers become wealthy thanks to 401k, stock ownership plans, and stock option grants.
That's great.
That's the way you do it, though. They participate with. It doesn't have to be some zero-sum game where I don't think every billionaire stole the money out of people's mouths to become a billionaire. Didn't they create some of that?
So one of the ways people often talk about it is this is about pre-distribution. So before the wealth is created, giving people a stake.
Before.
That's the idea.
Why not do that?
Well, that's the goal. And our aspirations here are massive. So I don't think people really understand what we're trying to do. At KKR, we've done this with 80 It will soon be 100 companies. 250,000 frontline workers are going to have stock. We're already around 200,000. We and about 100 different organizations started a nonprofit that you mentioned, Ownership Works, which is trying to build a movement around this. And then the big swing here is policy. So if we commission polling work, everybody likes this idea. It is one of the few things Democrats and Republicans
And when you
can
say
agree on.
policy, what would you like? You would like a government program that does what?
Well, there already is a government program. In 1974, very few people know about this. Congress created the ESOP. So the ESOP was a part of the ERISA Act, and it gave companies a tax incentive to share stock with workers. There was a big boom in ESOP formations in the 70s and 80s. It is not as popular today as I wish it were. We get about 200 new ESOPs a year. They're mostly small businesses. The median size is about 48 workers. Could we modernize that policy? And could we get, like Walmart used to have a massive ESOP. Cargill had a big ESOP. Could we bring that back? And if we either try that, or maybe we do a blue sky idea on how to incentivize companies to share ownership with workers.
Pete, it's a longer conversation, but it's a good one. Thank you.
Thank you.
Appreciate it.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories this morning, the House is expected to vote on the continuing resolution to reopen the government. We'll be speaking to House Majority Leader Steve Scalise. That's coming up later in the hour. JP Morgan CEO Jamie Dimon and NASDAQ CEO Adena Friedman are among the corporate leaders expected to dine with President Trump tonight at the White House. That dinner will be the latest in a series of high-profile events that President Trump has held as he tries to win support from the country's top business executives. And the FAA cutting more flights to keep air travel safe as staffing issues continue at U.S. airports. Transportation Secretary Sean Duffy saying restrictions will ease as controllers return to work, warning of more dire disruptions if the government stays closed through this week.
All right, let's check the futures this morning, which are adding to where the gains were earlier today, and the Dow adding the gains from yesterday. That's another high. Take a quick look at Treasuries, and then we'll go to get to, actually, yields have come down a little. Let's get to Mike Santoli at the New York Stock Exchange. Hey, Mike.
Hey, Joe. Yeah, the S&P 500, here's the index fund that tracks it, is tilting a little bit higher, pretty much in sight of those former highs. It's, just a couple of points, basically, on the ETF. You see we had this, 3%-ish pullback starting on October 10th, quickly bought. You had a 4% peak-to-trough intraday decline about 3-4 weeks later, again, quickly bought. So there's a resilience in the market. It's definitely been, style points are not really building up because the breadth isn't that great on a given day. You have actually a lot of stocks making new 52-week lows. There's been some punishment meted out to some of the AI spenders, but netting out to still a pretty strong tape because you have these relatively strong seasonal tailwinds in part. You mentioned the Dow. We did get to a record yesterday. Here's what it looks like next to this quality ETF. It's sort of the high-quality financial companies or companies with high-quality financials within the S&P 500. It has really been tracking that for a while, but you see the Dow has kind of lifted off beyond that. That's in part due to things like Goldman Sachs, which has such a high stock price, it's like more than 10% of the Dow right now, but also the healthcare components, some of the older economy areas of the market have started to wake up a little bit as we rotate around. And take a look here at healthcare within the S&P 500 relative to consumer staples, often more defensive groups that move together. And you see healthcare as that blue line just rocketed higher, actually just surpassed its early year high. So it's sort of participating on a belated basis. Maybe some regulatory worries have cleared away, and then you have very depressed valuations based on its history and compared to the market. So some evidence there that laggards are trying to catch up and make up some ground that they've lost to the Mag 7 trade for much of this year, guys.
At S&P, and back again towards 7,000, Mike, and it's
yes,
only,
intraday high
November.
just over 6,900 from last week or 2 weeks ago.
Who'd have thunk? All right, thank you.
Up next, AMD CEO Lisa Su saying overall revenue growth will expand to about 35% a year over the next 3 to 5 years, driven by AI demand. Take a look at that stock this morning. You'll see it's up by better than 6% or just at 6%.
Order
Lisa
canceled.
Su, the CEO, is going to be joining us right after this break to talk all about the company's Analyst Day and much more. Squawk Box will be right back.
Goldman Sachs Active ETFs. Designed to deliver outcomes. Driven by more than 150 years of rigor. Not just active, relentless.
Some people like doing things the hard way, like doing their finances with a spreadsheet instead of using Quicken. Quicken pulls all your financial info together in one place and updates it automatically. How easy is that?
As teachers, taking care of ourselves is taking care of our students. AG1 gives me a little bit of kickstart to my day, and I know it's full of ingredients that help support my immune system. We are better as teachers when we are feeling healthy and strong, and it is very hard to do that when you're feeling run down. I've got a whole classroom counting on me. I don't want to miss a day.
You made the nice list, kid.
Thank you, Santa.
Paige.
In the flesh.
Rookie of the year. Nice list. Swishmas came early this year. Santa.
Oh, sorry.
It's okay. Bryson kept you cool. Very nice.
Yeah, Santa.
CD Lamb breaking those DB's ankles is not very nice, but those routes sure are. Maybe next year, Mr. Green.
Again?
For everyone on your nice list.
Buy the dip with Pro's Best Deal of the Year, including exclusive access to Pro Live events.
This is my first time at the stock exchange, and it's been awesome.
Go Pro at cnbc.com/Pro Black Friday. Terms and restrictions apply.
Where does confidence come from? It's not from within. It must be pursued. Confidence is not a mindset. It's an achievement. In the GMC Sierra HD AT4X. Get 5.9% APR on 2025 GMC Sierra heavy-duty models. That's over $4,000 in average finance savings.
Order submitted.
What can I get you today?
I don't know. Why is it so hard to find a job where I can help people?
I always wanted a job where I can travel more.
I want a job building rockets.
Okay.
A job that uses my people skills. And a cheeseburger. I'm a creative person. I want to work somewhere creative.
Welcome back, everybody. AMD hosting an analyst day yesterday. It's the first time in 3 years. The chipmaker says that revenue growth will expand 35% a year over the next 3 to 5 years, and the company's AI data center is expected to grow at 80% a year and potentially hit tens of billions of dollars in sales by 2027. Joining us right now is the AMD CEO, Lisa Su. A note on this, AMD's stock up phenomenally. You can see since she took over, 7,589%. Lisa, I think when you took over, this was a $2 billion market cap. I think today it's above $386 billion. Congratulations.
Thank you. Who's counting?
Well, it's great to be here with you guys this morning. Thanks for having me.
It's great to see you, too. Last week, you had earnings that came out that beat all expectations, and yet the stock actually declined. I think people were waiting to see what you said at the Investor Day. They liked what they heard, especially when it came to the revenue, the annualized growth that you're expecting, 35%. I think most people were looking for closer to 30%. Predictions are hard, though, especially about the future. And I guess the big question is, what makes you so confident?
Well, first of all, it was a great day yesterday. It's always nice to sometimes take a step back from just, what's happening on a quarterly basis to really talk about long-term strategy. And it has been, as you said, it's been 3 years since we've hosted an Analyst Day. But what we thought is, there's been so much that's changed in the market just over the last, 12, 18, 24 months that we kind of needed to just take a step back and talk about the company as a whole. And frankly, we're in just an amazing cycle for, technology and specifically around AI. So, back to, the major points, the market is accelerating at a pace that we just did not understand until, over the last few years. I think we started A couple of years ago, we thought the AI accelerator TAM might be $300 billion, and that sounded like a really big number. And then each year we took it up. And now when we take a step back, we see this massive opportunity, really over $1 trillion overall market as we get through 2030. And it's a place where everybody needs technology. Think about it as you can think about computing as equating to intelligence. And if you can get more intelligence, why wouldn't you want more computing? And that's kind of the market that we're in. And so, from that standpoint, we're really excited about what we have. It's a product portfolio, it's a set of partnerships, but it's also a vision for where computing is going in the future.
What makes you so sure of that demand? What do you see that makes you think not only that this demand is going to be big, but that it's real and that it's not going to disappear?
Well, Becky, we spend a lot of time in the ecosystem, and being in this industry for as long as I've been in this industry, over 30 years, I think you see a lot of cycles, and you see a lot of technologies take off. The key is what people are saying as they're actually utilizing the technology. So we work with all of the largest hyperscalers in the world, all of the largest enterprises. And if you looked at sort of the AI trajectory over the last couple of years, I think people started with tremendous excitement. ChatGPT came on board. Everyone was like, wow, this is pretty good. And then enterprises started using it. And frankly, the early enterprise usage was a little bit slow. I mean, people were kind of just trying to figure out what to do. But if I tell you what we've seen in the last 12 months, we've seen every one of our largest customers say, we can see the inflection point now, Lisa. Like, we can see demand is accelerating because people are now starting to get real productivity out of the AI use cases. And we have all of the largest hyperscalers in the world saying they're investing more in CapEx because they can see the return on the other side of it. So it is something that we always are looking for, the signals in the market. But the signals in the market right now say that we're still at the very beginning of the technology, but you're starting to see significant productivity improvements.
Do you really think that they can see the returns on the other side? Or do you think there's a little bit of a big gamble going on, which is to say that there's a bunch of them will tell you quite openly, look, I'd much prefer to be ahead than behind, meaning ahead than behind. I'm worried that if I don't invest enough now, I won't have enough capacity later, but I can't necessarily fully math out how it's going to work out on the other end either.
I don't think it's a big gamble. I think it's the right gamble. And the way I would say it, Aaron, is we can also definitely see that more computing and more investments equate to a faster pace of innovation. I think that's definitely there. I think you can also see all of the pointers to more productivity and more capability. Now, exactly timing of ROI, right. If you're talking about is it 12 months or 24 months, I think that's where it becomes a little fuzzier. But I would say that, look, our largest customers are extremely disciplined companies, and they have the balance sheets to invest. And this idea.
I'll give you an example. The one that everybody talks about is OpenAI.
Yeah.
So OpenAI in 2028 is expecting to lose $74 billion. By the way, they have $13 billion in revenue right now. I believe that's the number. They believe that between 2028 and 2030, that they will all of a sudden become a profitable business. So they have to make a swing from a $74 billion loss. Something magical has to happen in the course of 24 months. So the question I would ask you, as somebody who, by the way, has to think of them to some degree as a customer / creditor of sorts, how you think about that math.
Yeah. So again, Aaron, I would take a step back and say, when you look at the entirety of what the AI sort of technology companies are, you have the largest hyperscalers, you have, I call it the AI native leaders like OpenAI, Anthropic, others. And what the underlying foundation is the same. They all need computing. Now, relative to your comment about OpenAI, I think OpenAI is a phenomenal company. I mean,
I do too. I use it every second. I love the business. I love what they're trying to do. I just don't. I'm trying to understand the math.
Let's start with the vision, and then we'll come to the math. When you look at the math, the vision will say you need more computing. That today, computing is a limiting factor in how much people can adopt AI, and you can see that in a number of different places. And so, yes, you have to invest ahead of the curve so that you can get the entire user base on there. But if you just take a look at the growth in users, and not just at OpenAI, but across the entire AI ecosystem, we're seeing that growth. And we're seeing that growth because there is true productivity coming at the other end of it. And from that standpoint, I think we are all, like I said, we're disciplined business people, but we see an incredible opportunity in front of us. And absolutely, if one has the capability to address that with a fantastic balance sheet, you would absolutely do that.
Let's talk about your plans for AI data centers. You are scaling pretty rapidly. You see the growth there in terms of revenue being greater than 80% over the next several years, and potentially getting to have more than a 10% market share in that business over the next few years. To do that, you're going to have to go through NVIDIA, because by some estimates, they have more than 90% of the market share right now. What's your plan for doing that?
Well, I would say, once again, this is an amazing market with tremendous growth. And whenever you have a market that is, let's call it, early in the cycle and also on a steep growth curve, it really favors innovation and it favors partnership. From our standpoint, technology roadmap, we're super excited about the new products that we're bringing out. We have our MI350 series currently in production. We have a big step up with new rack scale architectures coming next year. What we also have is a really strong set of partnerships. Aaron mentioned OpenAI. We have partnerships with Oracle, Meta, all of the large hyperscalers. And the key in this type of market, Becky, is that everybody wants to have sort of multiple solutions. And frankly, there's no one solution that fits all. You can see with different workloads, you're going to want to have the best technology for each one. And we do believe we will have a significant piece of this market. I think between large hyperscalers, enterprises, as well as sovereign nation states that are out there building large data center installations, I think we are an excellent option, and we've talked about some of the key partnerships to do that.
Yeah, mind-boggling what I've seen with AMD. We spoke just briefly about Jerry, one of the co-founders, Jerry Sanders, who I knew for a while. He started this in 1969, I think. He was at Fairchild. Every employee got stock options when he started. And you told me I haven't kept up. He's still alive. Maybe he might be watching. He's 89 years old, I think. The reason I bring this up, Lisa, I watched AMD challenge Intel for years and years, and I have to rethink everything because I thought of it as an also-ran back then. And it always seemed to be it seemed to be copying or cloning a lot of things that Intel did. The chart doesn't even work. And this is only, what is that? That's only 10 years for Intel versus AMD. Something happened somewhere. Can you tell me where Intel missed something or AMD capitalized or capitalized? I mean, obviously, but was it, I don't know, did things change in the business? What caused Intel to lose its preeminence?
Well, first of all, Joe, as I said, we love Jerry. I hope Jerry's watching. He absolutely founded a fantastic company, and I'm honored to be a CEO. Look, I've been CEO for 11 years, a little bit over 11 years. And as I said, what you find in technology is when you're at inflection points in technology, you have to make the right strategic bets. You have to decide, hey, I know where it's going to go, and I'm going to invest in those places. And that's what we've done. I think we had a vision that high-performance computing was going to be the most important thing, and that's what we were going to invest in. And with that, we systematically gained confidence. Becky, back to your earlier question, when I started, I think we had 1% of the CPU market, and today we're probably about 40%, and I think we have a path to be over 50% or number one in the market. And that came from just a true belief of where the technology is going and how do we partner with the largest companies out there.
I'm not anybody to question your ability to do it, but it is really hard, I'm told, to come up with this rack scale infrastructure. And obviously you care about putting your customers first, you care about building trust with them, you're not going to do anything that would put that at risk. But even NVIDIA stumbled when they brought out the Blackwell chips, which is their third iteration of that architecture. So what are you doing? How can you be so confident? So what are you doing to make sure that this pulls off without a hitch?
Well, Becky, I can say that our track record is we've built an execution machine, and we are very confident in our ability to bring out new products. One of the things that, when you look at the past 5 years, we've invested over $100 billion, both organically and inorganically in the company. So organically, really built up our engineering capability, hardware, software systems. Inorganically, we've done $60 billion of acquisitions with the idea of let's bring in the talent required to ensure that we can really pay off, these big bets. The key in technology is you have to make the right decisions, and I think we've made many right decisions. We recently acquired a company called ZT Systems that specializes in data center rack scale solutions, and they have been absolutely key to our roadmap going forward, in addition to a number of other hardware and software acquisitions over the last few years.
Lisa, big question in the industry is how to think about the depreciating value of these chips. So you're talking about sort of this fascinating, fabulous new technology and changing, increasing and making that technology better every single year. As so many people are building these data centers, the fundamental question is, how long do these chips actually work, or when I say work, are meaningful if you have to upgrade them, given how quickly things are moving, every call it 2 or 3 years or 4 years or whatnot, and what happens to them afterwards?
Yeah, absolutely. I think what we've actually seen is, I think this was something that people were wondering. Is it like the next chip is so much better that I have to rip out our current gear and put in new gear? What we're finding is that's just not the case. We're finding that as AI workloads expand, right? Think about it this way. You have the most advanced foundational models that need the latest and greatest and will take the newest chip as soon as it comes out. And then you have, a whole bunch of other AI companies that are out there that are just servicing, let's call it regular demand, medium-sized models, maybe even small models. Like large enterprises may do quite a bit of fine-tuning on their models, so they don't need the latest and greatest. What they want is something that is very reliable, very steady, has shown through the entire capability. And so they'll use, let's call it, the current technology. And what we're finding is there is a large set of use cases. Like we only always talk about the bleeding edge. And what I'd like people to think about is AI is for everyone. Like everyone should get a piece of AI. And that means in the cloud, that means you may use the current generation technology. And by the way, Aaron, I'd love you to be using AI in your PCs, because I think that will also be one of the key things.
I totally get it. The big question is, are we building railroad tracks that are going to be here for a very long time? Are we going to have to replace the tracks every 5 years, 10 years? I mean, look, this phone, which is the iPhone 17, I actually just found an old iPhone 2. You can't use the iPhone 2.
That's right.
You can't use really the iPhone 10. You probably, maybe the iPhone 12. So this is the fundamental question in terms of all of the money that's going into this space and how those chips, I agree with you, they'll get used in some way, somehow, but how, again, this goes to the sort of the math of all of this.
I think the math of people who are thinking, hey, is 4 years too long? I think are now beginning to see you can definitely use these assets, 5, 6 years, and some would say even beyond for, let's call it more of the workhorse applications. And that's what, kind of makes the growth rates what it is, because for the absolute bleeding edge new technology, you're going to build big new data centers, and they're going to be, different form factors, but the rest of the assets will continue to be used.
And you need a 5-year depreciation schedule in order for that to really pay off?
That's about.
Back to Andrew's earlier question, just going back to some of the deals that we've seen. From the outside, it looks like this crazy whirlwind where anybody and everybody in the industry, both when it comes to technology and energy, are meeting all the time. We just had Mike Wirth here talking about how he's talking to somebody, we don't know who, about building out an AI data center in Texas. Is it like that from the inside? Is it this crazy whirlwind of you got to meet with everybody all the time?
It is a whirlwind. I will say it is a whirlwind. And as we look across the ecosystem, I think one thing has changed. We've gone beyond, as a silicon company, we used to talk to our customers and our customers' customers. Like we would talk to the hyperscalers, we would talk to end users like the enterprises, the Mikes of the world. I think what's becoming clearer is now we need the entire value chain. That includes the people who are building the data centers, the people who are providing the power, and the people who are also providing the financing. Andrew, to your point about all of these things are important for us to put together. It is a broad ecosystem, and the way I think about it is that's actually the way it should be, because we need all of the pieces to accelerate for us to really put on all of this compute in the as fast as possible.
Are we, is the Trump administration using industrial policy in terms of Intel, in terms of did the Biden administration, in terms of the CHIPS Act? Are those good things? Is there a way to do it that makes sense, or you just do what you're doing? And
well, I think it's a fact of life that semiconductors are now essential to every country. They're essential to the United States. I think the Trump administration has actually been very, very helpful in terms of engaging industry. A bunch of my peers, myself, we spend a lot of time there just ensuring that there's a very clear understanding of how semiconductors, the U.S. wants to lead in semiconductors, and we absolutely want to be able to enable that. I think we lead today. We want to extend that. But it is a case where, yes, I think it's such a critical asset that it's a fact of life that we need to make sure that we're very, very much.
Do we want to design them, or do we want to make them?
We want to do both.
We
absolutely. We lead in
even
design.
If it's cheaper somewhere else.
Yes. Yes, we lead in design today, but we must have manufacturing in the United States. And even if it's a little bit more expensive, that's totally fine. Because if you think about the value that we're adding to the economy, you absolutely want to have.
How about the CHIPS Act? Was that done? Is that the way to do it, or how was it administered? Say something bad. No.
Say something bad.
No, I'm kidding. I'm kidding. I'm kidding.
Well, what I will say is that it's really important for the U.S. to continue to serve the entire world. So I think we all believe in this notion of we want the world using U.S. semiconductors and U.S. technology, the U.S. AI stack, and so that's a key imperative.
So do you think it's a mistake then for this administration and the prior administration to try to put limits on chips that are being exported?
I don't think it's a mistake. I think export controls also make a lot of sense given national security. I think how you implement is, the devil is in the details, and that's where we want to be very involved in sort of the regulations and how they come out. But given how important semiconductors are, I think export controls are, again, a fact of life.
I just had a separate question, which I didn't get to earlier. Masa-san yesterday dumped his entire stake in NVIDIA, effectively $6 billion worth, $5.8 billion worth, to use that money to commit to OpenAI. And I'm so curious what your reaction to that is or was.
I don't know, Andrew, that I have a particular reaction to it. I mean, I have a lot of respect for Masa-san. I think he makes his decisions. I view this as the AI ecosystem is in a place where people are making bets, and people are deciding what bets they want to make, and whether, which part of the stack you want to make the bets. From our standpoint, we're certainly at the foundational silicon level, but we invest in a number of AI companies as well, because we want access to that ecosystem.
But I just wonder whether he's saying to himself that the chip piece of this has run its course, and that he thinks clearly the next stage of value is in a large language model like OpenAI. That seems, from the outside, that seems to be what he's saying without saying it aloud.
Well, I would say, being someone on the chip side, I think the chip trade, or the chip industry is doing very, very well.
He got out in 2019, and that was a mistake for him,
time to get out,
too, so we'll see.
We'll see.
Lisa, let me ask you about Intel and NVIDIA, because I know you don't like particularly being compared to either one of them, but now the two of them have a partnership themselves. And from a competitive standpoint, what does that mean to you? How do you change at all, if there's anything you would change in terms of how you face either one of those companies?
Well, I think, Becky, our industry is such that we compete and then we also partner. Like, we actually have a partnership with Intel as well on the x86 ecosystem. Our chips run interoperably with Intel chips, in some cases with NVIDIA chips. It's a complex ecosystem. My main goal is to ensure that we have the right partnerships. And partnership is actually very core to our principles. I'm a big believer in there's no one company that has all of the right solutions. You actually need to bring the best of the best together So I like to say when we create partnerships, it's how do we do 1 + 1 is greater than 3. And we find we have lots of partnerships in the ecosystem to ensure that we operate well to really deliver everything that you need for the complexity of AI. Like AI is the most exciting, but it's also the most complex thing that we're bringing out there. And so you should expect that there are going to be partnerships with people who compete in some areas, but who also partner in other areas.
I think you have something in common with Condoleezza Rice. She started out wanting to be a concert pianist, and I think that was your first choice.
I wasn't good enough. She's a much better pianist than I am.
She said she wasn't good enough either, so Secretary of State was her second choice. I think we are lucky to have this be your second choice. We're lucky that you weren't better at it, Lisa.
I had one more just theoretical question. So I used to work, like I don't have enough to worry about, but I used to worry about Moore's Law and physical constraints and that the party's going to end. It almost became moot, didn't it? Because everything's sort of attached. Do we need Moore's Law to continue? Would it help if we could go on forever, and is it ending?
We all love Moore's Law. Moore's Law is, in its traditional sense, slowing down, but we've added many more laws on top of that. And the idea is when you have smart people and you focus them on a problem, they can do amazing things.
Getting around physics is hard, but they got around it in an elegant way.
Yes, you get to the next level of physics, right? That's what happens. You say, hey, I'm constrained. I mean, people used to say, like, there's no reason to keep investing in semiconductors. Semiconductors are going to be a mature industry. It's going to kind of just grow at a slow pace. And then what did you find? You found, AI came in, and all of a sudden, the foundation is semiconductors. Like everybody needs semiconductors. Right. And so the world does find a way when there is a need, whether it's computing or it's power or it's other things, engineers find a way to make sure they get through.
Malthus never made any, I don't think he ever won a bet, did he? I don't think he did. And when they tried to close the patent office in 1880 because nothing new was going to come around, I guess we've learned that wasn't a very good idea either. I can't believe it's going to continue without. So you can't really explain it, I guess, to me. Probably would take a while. How do you get around Moore's Law?
Well, I'll give you one quick idea, if it gives you any comfort. So
I might not understand it, but
we used to do everything in 2 dimensionals, and when we said, hey, we ran out of space, we decided we're going to put things on top of each other, and we call that chiplets. That's an example of one of the innovations where people were like, hey, that can't be done. Well, guess what? It can be done.
It's not an ice cream
snack? By the way, her decision to go with
a chiplet?
Is part of the reason that they took on Intel.
Oh,
that's right. Chiplets.
That's a chipwitch. Yeah,
people used to say, hey, you're gluing chips together? And it's like, no. We are showing you how you're supposed to build chips in the future so that you can really get around some of these constraints. So there are lots of examples like this.
Lisa, I want to thank you very much for joining us today. Lisa Su of AMD, and we appreciate your time.
Thank you so much. It's great being here.
Thanks. It was a lot of fun.
Thank you. Please come back. Up next, former Fed Vice Chair Richard Clarida on rates and the state of the economy. And then later, Majority Leader Steve Scalise on the government shutdown, the reopening, and hopefully, and much more. Squawk Box will be right back.
From technology to defense, silver powers America's future. It's critical to our way of life in times of global chaos. Silver 47 Exploration is discovering silver and critical minerals to counter foreign dominance. Silver 47.
Hi, I'm Jay Jackson. For almost 20 years, Abacus Life has been purchasing life insurance policies from seniors. And in just seconds, you can use the free calculator at abacuspays.com to learn what your policy might be worth.
For many of my clients, selling their life insurance to Abacus was right for them and their estate plan.
Don't sell or lapse your policy without going to abacuspays.com first. There are no fees and no obligations. Get the real value from your life insurance when you need it with Abacus.
You'll love this for you. It's the Sleep Number Black Friday sale. Recharge this season with a bundle of cozy, soothing comfort that adjusts to you through all of life's changes. Only at a Sleep Number store or sleepnumber.com.
CNBC's Changemakers 2026 list, spotlighting women who innovate, lead boldly, and are transforming business. Do you know someone who is rewriting the future? Nominate them now at cnbc.com/changemakers.
Team manager left to find themselves, leaving you lost. You need to hire.
I need Indeed.
Indeed you do. Sponsored jobs on Indeed are 2.5 times faster to first hire. Visit Indeed.com/hire.
Available at Macy's, the fragrance destination.
We got a news alert. This is actually big, and I wonder whether it portends even more of this. Coinbase officially leaving Delaware and reincorporating in Texas. Company making that announcement in a Wall Street Journal op-ed by its chief legal officer, who says that Delaware's Chancellery Court is no longer providing companies, he believes, with consistency. He writes the following, quote, "The choice is much bigger than Coinbase as part of a movement of businesses choosing markets with favorable regulatory and judicial review systems. Several states have recently adopted policies aimed at increasing economic freedom, which drives competition, the laboratory of democracy at work." All of this, of course, comes in the face of Tesla moving to Texas and a number of other companies that have been talking about such a thing.
You remember we had the governor on.
Yes.
And he repeated, every time we asked him about this, he repeatedly said, there's nothing to see here. No one's upset. No one's mad. We're the best. Delaware will always be the best.
And here's another company doing it. So.
Yeah. And actually, people were writing in saying, this guy he knows that there's more going on underneath the surface than he was admitting to. Do you remember? He's new, I think.
I think I suggested we would FOIA some documents. Maybe we need to do that.
I think you did.
I did.
Yeah, see? Did you remember that? I have to remind you.
I did remember that. Okay. I didn't remember to FOIA the documents. But nonetheless, our next guest is going to give us his insights on the economy, the Fed's rate path, and so much more. Joining us at the table, PIMCO's global economic advisor, Richard Clarida. He's former Fed vice chairman. Good morning to you. Normally I'd say, what do you think of the data? But we don't really have data, or maybe we do. What data are you looking at right now, actually?
You know, you get things like ADP on the labor market. There's something up in Boston that scrapes prices from Amazon. So you're getting some numbers, but it's obviously not the gold standard, which is the government data, which I assume we're going to start getting pretty soon.
So what do you think is actually happening here under the covers?
I think the labor market's been slowing all year. The challenge for Powell and the committee is it slowing because of demand for labor, or is it slowing because of supply of labor, immigration enforcement?
And what do you think the answer is?
Well, I think as of September, they've judged that it's really sort of a demand story, which is why they cut rates in September, at least on a risk management consideration. I think there's some evidence there, Andrew. You've seen some slowdown, for example, in wage inflation, but it's a murky picture at best.
You know, we just had Lisa Su sitting at the table where you are, and AI is a big question mark about employment. Do you think that's having any measurable impact yet?
Anecdotally, it does appear. In particular, you see, for example, employment for entry-level coders is way down. I do think it's too soon to tell, but probably we're moving in that direction. The question is, you know, the pace that we see and what sectors are impacted.
Okay, so we have the employment picture on one side of the aisle. We have the inflation picture on the other side of the aisle.
Yeah.
You know, if you were to talk to Scott Besson, he would say, look, inflation is decelerating, and it is. But there are pockets within the economy where you have inflation increasing.
Yeah.
And so if you
Good morning. Let me get the race set up, guys. Hold on.
About that.
Well, inflation, I think, is basically treading water. If you look at the Fed's preferred measure, it's running at around 2.8 or 2.9, and that's where it was 2 years ago. I think the Fed could make a case that but for the tariffs, it would be lower, but inflation's not falling, and it's been above target now for 6
This market sucks.
and so the point I'd be making,
A lot of Feds are speaking today too, so you got to be careful.
Market, there's also a risk that inflation is too high, and it may take
That's
a while
what
to get it down.
But this
Wizard
puts
was
you in a
saying
tough position
earlier.
because, you know, if you're going to lower interest rates, you're going to make the inflation
What are
picture
we
worse.
doing today?
Maybe make the employment picture better.
Birds,
If you raise interest
horse,
rates, you're
let's
gonna
do
the opposite.
some.
That's
Blunt-
right.
It's the blunt instrument. So what do you do?
Well, I think it's a judgment call, and I think that's why the committee now is pretty divided. And as the chair said at the last press conference, people of goodwill can look at the data and reach different conclusions. But I will say that there is risk management on both sides of the mandate now, just not on the labor market.
When you put your PIMCO hat on and people look at either treasuries right now. By the way, think about equities. Where do you think we are in this cycle, if it's a cycle at all anymore?
Well, obviously, there's a lot of optimism about AI, but more broadly, earnings season, at least based on what I heard on this show and others, earnings season was pretty good across the board. And I think markets have formed a judgment. The Fed is cutting. I think the Fed can cut more if the economy slows. And there's a lot to like about the U.S. economy. Certainly, if you compare the productivity story, even outside of AI to the rest of the world, it's quite favorable.
29 members.
Consider how the market was reacting before you would decide to cut or raise rates? Because if you look at the stock market right now, there's not much of a reason to cut, but this is a bifurcated economy, the haves and the have-nots.
And Becky, part of what's...
Good luck. Oh, cute little kitties. No, it's next week. We got paid yesterday. What? Be funny you win, OD. Let's go, mommy. What? Oh. Okay. Yep. Oh, I don't see Gambit on here. Cheap ass Gambit. No. Yeah, he never did. Yeah. Come on, Gal. Win it. 16 seconds. Ooh, AJ and Gal. Let's go. Roll the dice. Nice. Congrats, bud. Are you here, Roll the Dice? I'll find you on Twitter or something.
Benefits. I know my money's working hard for me, and I know I can access it anytime I need it.
Who's Roll the Dice?
Consumer Cellular knows there are a lot of offers flying around, but they slip away too fast. We don't play games. What you see is what you get. Bet you're glad you wore cargo pants. See how
You guys know him? Let him know he won, because I don't think I have him on Discord or anything.
I thought SoFi just did student loan refi.
Yeah.
I bank with them, invest with them, and have my mortgage through them.
Speak to a SoFi mortgage loan officer. Get low down payment options and unlock a $1,000 mortgage discount with SoFi Plus.
Never miss a moment.
There we go.
Small companies drive hiring. To see that weakness at the small company level is still a concern, and I think that's one of the reasons why the recovery has been so tepid.
The deficit with China is down 25%. We could have had a looming financial crisis.
The average American believes AI is happening. They're just not sure if it's going to happen for them. You can't just have GDP growth for us and no GDP growth for them.
Day 43 of the government shutdown. House leaders are expected to vote on the continuing resolution that passed the Senate. And joining us now, House Majority Leader Steve Scalise. Majority Leader, it's good to have you on. Good morning. Thank you.
Good to be back. Thanks for having me.
I've seen it a few times where they ask Speaker Johnson about it, and I don't know, people run with, you know, if it bleeds, it leads. And I guess he didn't answer, oh, yeah, it's a done deal. It's definitely going to happen.
Excuse me.
They try to instill a little bit of uncertainty about whether it's all going to go smoothly. Is it going to go smoothly? Will it be today?
Oh, are you busy?
It's going to be today. We'll start the process probably around 4, 5 o'clock. The actual vote on the bill to fund the government will probably come later around 7 o'clock after all the debate. There'll be, I'm sure, a good, thorough debate. But it's so important that this gets done. We've been trying to end the shutdown for over a month now. And look, I think some Democrats still want to play games and inflict pain on families across America. But we've got enough, luckily, 8 in the Senate. You know, we may get a few more than that in the House who want to end this madness and just let people get back to their lives, stop holding hostages. We still have differences we need to negotiate. That's going to go on. But don't hold the American people hostage. It's been a ridiculous shutdown. It's time to end.
I've watched things in sort of, it's very puzzling to me when I've seen leaders of the Democrats say, we are not going to accept this. We are going to keep fighting to keep the government closed, which is just, I wonder whether they hear themselves saying, we're going to keep fighting, we're going to keep fighting.
Oh, now you want to join up, Ismail.
What's happening?
It's late.
What's happening with Snap?
You're like 10 minutes late, man.
Traffic controllers, salaries, government.
We'll do another one next week. Maybe 100K,
To
Lucid.
be in that position, how do they justify that?
Yeah, they know that this is inflicting pain on millions of Americans. And are they not listening to those people? And these aren't the billionaires and the billionaires that they love.
No, I can't race again. I don't have any more
This is
Tradeify.
the least amongst us. You know, SNAP recipients, low-income families who
When's the bot's gonna go
those
long?
food
Not
stamps.
anytime soon.
It's going to be our men and women in uniform, air traffic controllers who work incredibly stressful jobs and now have to also go drive an Uber shift just to make ends meet because the bills are still due, just because Democrats shut the government down. And they don't care that they're inflicting pain on people. It's madness. But it's going to end today, hopefully, and let's move on.
I mean, what's two votes, and even with the new representative that's been sworn in, the margin remains the same, and you have no doubt that Speaker Johnson has the votes?
Yeah.
Well, it's going to be work because you still see the Democrat leadership digging in against this thing. Again, last night they were in the Rules Committee until 1:30 in the morning trying to bring amendments to do things like gut the $50 billion rural hospital fund. What does that have to do with any of these fights? And how's that going to help any family to hurt rural hospitals? They are a rudderless ship of a party right now. They don't know what they want. All they know is they want to wreak havoc on the American economy and hold Americans hostage. And I think the American people are sick of it, and it's going to end today. We just need a few Democrats to join with us. I think we'll get that, and then we'll move on to a lot of other things we have to do.
Yeah, that is interesting. The midterms are coming up already. They're not really coming up, but that's next. And I don't know how the two parties are going to be viewed in hindsight as time goes by. I can tell you, I looked at something this morning, and I made the reference that AI, roughly half the time it's wrong, but I looked at something that was trending. It said the government's set to reopen after a Republican bill to cut health care, Obamacare credits, that they finally voted. They were they finally were able to pass that with help from Democrats. A Republican bill to cut Obamacare subsidies. So that's on AI. And then, so people read that, the public.
And that's inaccurate, but that's, if it's on the internet, it must be true.
And they ask the public whose fault it is, and the public has just read that Republicans are cutting health care benefits, and then they say that they're on Democrats. And then the same people use that to justify, to say that, oh yeah, more people think it's Republicans' fault. It's just like this weird circular.
Those COVID health benefits, the subsidies they're talking about, that go to insurance companies, were set up by Democrats, not Republicans, to be temporary. Democrats are the ones who set them up to expire. They never wanted them to go on beyond COVID. And yet now they're saying that's what the shutdown's about. Well, then why were they trying to gut the $50 billion rural hospital fund last night?
It's not 20 million people that are going to see these. A lot of people are not going to have these huge increases, but there are, I think, at least 2 million or so that are going to be very adversely affected. Not wealthy people. I mean, I think it's what, 400% of a living wage or something is who it affects. But that could come back to haunt Republicans if something's not done. Do you think that it passes when there's a vote in December for this?
Well, I think the one thing that all of this is exposed is that Obamacare is deeply broken. And it was Democrats who created it. Everybody knows Democrats only passed Obamacare. We said it was going to create problems, raise costs for families, limit options, limit the doctor-patient relationship. And it's done all of those things, unfortunately. And so now we're at a place, do you keep shoveling hundreds of billions of dollars of taxpayer money into insurance companies while your premiums keep going up? Or do we actually focus on lowering premiums? That's what Republicans have been focusing on. In fact, in our One Big Beautiful Bill, we had a provision called the CSR cost share reduction that would have lowered premiums for families by 13% on their health insurance premiums, and it was Democrats who blocked it. So, Democrats have always been against lowering premiums because they want to push everybody into Obamacare, even though they admit it's failed and it's costing families unbelievably more money. 80% more you're paying for Obamacare than just 10 years ago. Why won't they work with us to lower premiums on families? We're going to do that, by the way. We have bills in Congress right now to lower premiums, and we're going to move those bills.
That's the criticism that we hear levied against Republicans a lot is you've never liked Obamacare, but you still have not posited or proposed a fix or even an alternative other than just getting rid of Obamacare.
We've laid out a lot of ideas, and Democrats have voted against them actively. So there have been votes. PBM reform last year would have lowered prescription drug prices. Again, the CSRs that we had in the One Big Beautiful Bill, every Democrat voted against, scored by CBO to lower premiums by double digits for families. We have other things like health savings accounts, association health plans, very proven to lower premiums and give families more options. They want to push everybody into Obamacare and give you no choices. We want to give you a lot of choices and lower your premiums. Big, big difference between the two parties.
What's going to happen in January? And do you ever see any of these bills? I think Ron Johnson had a bill where this would not be possible to do this, again, to threaten or to do a government shutdown. What's happening in January?
And I like Ron Johnson's bill. Jen Kiggins on our side had a similar bill to pay the troops. You had other members, Mark Alford, to say, don't hold the American people hostage if we have a difference of agreement over government funding. But as you saw, even in the middle of the shutdown, when pain was being inflicted by Democrats, it was Democrats who voted against those bills to just help military men and women, air traffic controllers, other federal employees. So hopefully common sense comes back to some of these folks. We're going to give them those opportunities.
All right, Andrew, you want to, I mean, the rage on the left is, for these 8 senators, it's like, it's just, it's hard to understand. Can you explain it?
Yeah, Democrats are attacking each other right now. It's ridiculous.
Don't look at me.
Yeah, why? I want you to ask that. It's downright, it's uncivilized.
You did a very good job with the majority leader.
Okay.
Look, we're ready to go. We're going to get this thing back on track. And then we have a lot of work that we're going to make up. Next week's going to be a very busy week in the House. We're going to be moving good agenda, policy agenda items for the American people.
Reconciliation
and Democrats can. We're looking at it. Obviously, if we can get consensus, we'll do it.
Because you did the OBBB, and it's just been fighting since then. Trying to prevent other things from happening. So.
But there are a lot of other good ideas. We're looking at permitting reform. We want to do a number of other things to help energy production in America, lowering crime. We got a very busy agenda the rest of this year.
Right. Majority Leader Scalise, thank you. Appreciate it. Squawk Box,
thanks,
man.
Sarah Benzino, Brandon Coley, Jablonski Auto Body, LLC.
What'd she call Harper?
Oh, you mean Jablonski Auto Body, LLC.
We actually sold the twins naming rights.
You know, like stadiums do. Kids are so expensive these days. Here he comes.
Oasis Breeze Tan and Spa.
If you need a tan, I'm your man.
Could do business with you.
Or we can look at some investment options for you.
Works for us.
The right money moves aren't as absurd as you think.
At PGIM, our ETFs use today's best ideas to help bring tomorrow's goals within reach. Our broad suite of over 50 low-cost ETFs is backed by 150 years of active management expertise. Explore PGIM ETFs today.
These are people who are trying to change the world. Startups have this energy that energizes me. I'm thriving by helping others thrive every day. People who know BDO.
In a world of conformity, it's often the innovative that stand out. At FlexJet, we've built a state-of-the-art operations control center with an international fleet of private jets and helicopters. Our Red Label crews are leading the way in pilot compensation, all supported by one of the world's largest maintenance networks. This is our timeless dedication to you. That's why we're outgrowing the competition 2-1. At FlexJet, you won't just be flown, you'll be moved.
Buy the dip with CNBC Pro's Best Deal of the Year. Subscriber-only content from Wall Street pros like Josh Brown.
You're going to love the best stocks in the market list.
Go pro at cnbc.com/Pro Black Friday. Terms.
Football fans are some of the most dedicated fans in sports. It's a fundamental quality we share, and that fuels every single order of our hand-battered chicken fingers. Wherever there's football, there's Raising Cane's. One love.
Go Cowboys.
Happening this morning on Squawk Box, AMD CEO Lisa Su telling us that she's confident in the demand for high-performing AI chips and the needs for those chips, she says, is expanding. Meantime, KeyBank upgraded AT&T to overweight with a $30 price target. AT&T trading just above $25 right about now. And Coinbase, this is fascinating, is reincorporating now in Texas.
I didn't really trade much last night. I was busy pissing someone off last night.
Part of a movement of businesses choosing markets with favorable regulatory and judicial review systems.
And you're down with us moving to Austin.
I was in Austin. I love Austin.
Let's see. Bot is not going along. Nope.
I don't know if Becky's moving, but
A lot of feds today.
I've lived in Texas. I liked it.
But for the purpose of the show, London. London. Make sure you join us tomorrow. Squawk on the Street begins right now.
Bot's been short, but it's over on the short, I think. Oh, Tradeify on Tradeify TV, they saying that CPI is moved to next week. I don't know if that's true or not.
Investing not as if by magic, but as if by profits. And for that to happen, there's going to be far fewer winners and a lot more losers.
Yeah.
That's Jim on Mad Money.
Good thing I didn't buy anything for YOLO.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Kramer here at Post 9 of the New York Stock Exchange. Favors on assignment. Coming off that Dow record close,
Phidias?
futures pretty solid as the House returns to work for the first time in 54 days today. We'll vote to end the shutdown around 7 p.m. tonight. Our roadmap begins with the state of the AI trade. AMD expecting sales growth to soar, driven by what it calls insatiable demand for AI. Goldman's out with its latest forecast for global stocks, expecting double-digit gains for the S&P next year, although well outpaced by international stocks. And the House gearing up for a crucial vote, as we said, to end the longest government shutdown in U.S. history. Let's begin with this AI trade, though, a day after the Dow did hit that new record high. Jim, lots working. We were talking to Santoli this morning about Goldman's effect on the Dow right now.
Right. Yeah, Goldman. I think Goldman goes much higher because we are in a merger market and an IPO market and a debt market that is rather extraordinary. The latter being very much more lucrative. People don't realize it. We have a big position for the trust, one of the biggest positions. And I think that stock at 16 times earnings just makes a lot of sense. In my theme that I'm developing now, something at 16 times earnings is something we really, really want. Something that is 40 times earnings, something we don't want as much. And something that is something times revenues, that's over. Because those companies are in the prove-it phase. We've had a lot of, I always said, listen, if we ever get a lot of insider selling, if we ever get companies going up a lot that don't make any money, well, then I will say sell. Now, there's happening.
I think they're going to do it again. I think either next week or after that, because it was too much traffic to the website.
Lisa Sue's company, AMD, is doing incredibly
So
well.
say you reset
it
the
does say
next
that,
week.
when Oklo reports and they report a not great number, you shouldn't embrace it. Because just because it's nuclear, because I'll take Mike Wirth and Chevron and natural gas.
Yeah, I mean, you got to YOLO your Lucid now, right?
But I think we have to get away from the companies that are hostage to OpenAI, for instance. Now, Lisa has more business than OpenAI, but I was quite stung by what happened yesterday with CoreWeave, right here, where I thought Michael and Trader was clear. First when pressed, that it's not one site that there's a problem, it's 5 sites. And I don't want to hear that. I don't want to hear glitches when we're in the year of magical investing. It makes me say maybe we're in the era of profitable investing. That's a switch for me.
Right. There is this nice Morgan Stanley report looking at power shortfalls by 20%, power shortfalls, tens of gigawatts of shortages of power.
Yeah, well, it's very hard when you have GE Vernova, which is a big position for the trust and want it to be much bigger. They make turbines. There's not a lot of turbines being made. You need turbines to be able to convert. There are some states where there's still available power. The key here is going to be batteries. It's going to be Elon Musk and whether we can store the stuff and use it at night. Because right now we don't have enough. And when you listen to InTrader, remember, it's a twofold issue. You got to build the power, and then you also have you have to have the building. If you don't have the power, then you're not going to go as fast as you'd like.
Right. Although you asked InTrader yesterday at this desk about why he was so confident in OpenAI being good for the money, and he immediately went to their monthly active users, and you kind of called him on it.
Well, I remember that. I was in the business of monthly active users in 1999 when the Street.com came public. We had more eyeballs than any ophthalmologist there was in the country. So what? I mean, we weren't ophthalmologists. Right. But I remember saying this stuff. I remember them being pressed on it and saying, listen, right now everything's being measured by eyeballs. I was at a 1,000-person Goldman conference. And I said, listen, as long as it's measured by eyeballs, we're king. The moment it's measured by profits, we're dead. and things flipped within 2 months when we came public, and the stock went from 62 to 2. It was the height of embarrassment, and I always said if we ever see that again, I'm going to call it out. So I'm seeing it, and I can't just say, well, you know what, that was then, this is now. I'm not Michael Burry, whom I don't know. I'm not going to short what Lisa Su said.
You're not a fan of his depreciation thesis.
No, I think Lisa Su talked about the depreciation thesis, same as we heard from Michael Trader. It's just that as soon as I heard that same thing about... Look,
I traded this morning with the bot. I caught the short. That's about it.
They have to. And I don't want to backstop.
Yeah.
No, I have... No, not anymore. I have one account dedicated to the bot.
In this very space, in September and October, debt issuance from just 3 companies was larger than all of tech debt issuance in the preceding 3 years.
I tried to, but I take the profit too early, so I only got up like $100, but it could have been like 400.
There it is. There's a look at what happened in the last 2 months.
You know, I didn't want debt. I didn't want insider selling. I didn't want at the market selling.
It has a pullback. Yeah, it does a little pullback. Then it'll fix
itself. If I were in the business of selling debt, I would say, hey, but listen, we got firm commitments. I'm in the business of telling.
I think it's going to chop today with all these Fed speaking.
Who I work for, and it's just I can't be inconsistent. I did not like the CoreWeave interview. It was not an interview where I said, you know what, I feel great now. And Core Scientific not being able to finish up. Well, that's true.
Fed speaks at 9:20, so it'll be 8:20.
Moment for our viewers.
And
our
then,
viewers have to know that.
Yeah, and then a whole bunch at 10 a.m.
You know, I'm a little worried.
And then 10:20, 10:30.
CoreWeave's fabulous. I'm not going to do that. Right. You know why? Because it doesn't matter anymore. I just got to tell it the way I see it. I'm not bucking for, what am I bucking for?
Would you agree with B of A today that shorting hyperscaler bonds is a top trade for 26?
Well, I don't short bonds. There is an HYG, an index that you can do for high yield. And if you feel like I do that things are getting out of control, you can do that.
Yeah.
And that's a better way than individual pieces of paper. But I keep looking at that remaining performance obligation, very tricky term, but how much Oracle's got basically in the bank from OpenAI, and that triggered this next wave. And OpenAI, Sam Altman had all the characteristics that I saw of very boisterous infospace people who are saying, come on, short me. You don't ever tell anyone, I wish I were public so I could be shorted.
Right.
No, you don't. You don't. And you may think that things really are magical, but they're not magical. It was
So
magical.
30 Lucid, I gave out 9 already, so I gotta slow down on passing it
There
out.
was a very good, my friend Tom Poley was honored for an ALS, Man of the Year for Lou Gehrig's side. And a really nice man came up to me and said, thank you for making me millions. And I said, remember, you guys, it's not.
What do you say, Gambit?
Made until some selling.
No, the Lucid TPT I still got a couple.
Oh, these are, again, in 2000, I would meet people and they had made so much money.
I gave 2, a TPT and a Lucid. Guess what happened?
Who loved Confessions of a Street Addict. And I said, could you tell that guy?
Typical degen style, every fucking time.
It was incredible. I had only brought a company public that had gone from 63 to 2 and was a hedge fund manager that had made a lot of money. I knew nothing. But he,
Okay, are you near payout in your Fundingticks?
That said, Phidias today does point out that when AMD gave guidance on semi and network TAM back in 23,
you see what happened to AV too? Dang, he got hit hard yesterday. AV, he was close to getting a payout too, but he went negative 1,700 yesterday, so he has like the 100 buffer.
They're picks and shovels. They're picks and shovels of this thing, and picks and shovels has made out every single one of the rushes, the gold rush, everything, and she's real, but she's playing with real money. Now I think Andrew correctly pushed her on the money from
Yeah, he was. Yeah, he was 3. Yesterday he was 200 in profit. I thought he stopped trading, but later on he posted. Yeah.
It's not just magical thinking that ends, it's actually profits that end. Right. They have to deliver. And the 800 million users, I'm getting tired of that. The $20 billion exit run rate, they're on the hook for so much money that I would feel better if they just slowed down. That would make me happier. They could just say, listen, we're going to digest this.
And the market response to that would be?
Well, I think a lot of these stocks would go down, but maybe it would last longer.
Right. It's worth listening to what Lisa Tu told Andrew.
Sure, she was great.
Take a listen.
Computing is a limiting factor in how much people can adopt AI. And you can see that in a number of different places. And so, yes, you have to invest ahead of the curve so that you can get the entire user base on there. But if you just take a look at the growth in users, and not just at OpenAI, but across the entire AI ecosystem, we're seeing that growth. And we're seeing that growth because there is true productivity coming at the other end of it. And from that standpoint, I think we are all, like I said, we're disciplined business people, but we see an incredible opportunity in front of us.
So that's interesting. And the street reaction, a bunch of price target increases today.
Right. Ben Reich, she said that to Ben at Mellius last night. I do think that they have the orders. So does Jensen. Jensen runs the orders. You need the orders in order to be able to get to where we're going to go here. It's just that we need the orders to be paid for. And I felt better that Lisa
It wants to
we've got orders to
dip
be paid for.
at open, but I don't know.
Has a list of clients who are willing to pay for anything that was going to meant for China. And I think that
That late? On Monday, you just got to your bank now?
I'm after the other companies that are on the hook.
But today's Wednesday, yeah.
Chiefly at OpenAI, and that's it. And I think that all the quantum and the nuke, I just think you're going to, that's just not where I can be.
Right. Although IBM had some reassuring news on quantum where we might be getting some hard evidence in 26.
I've been saying that you got to own IBM if you want to own quantum. It's not expensive. Barbara Christian walk me through their quantum. It's commercial. D-Wave is the only speculative one that I could actually countenance, but I even pressed the CEO, Dr. Barrett, and said, listen, IBM's got it.
You think IBM's the best quantum play?
Oh, by far. And then the second would be Google. But Arvin Green called me up basically said, listen, I want to show you this. And it was very convincing. And by the way, he's
on a 50K?
He's not a magical investing guy. He's a serious. I meant, I like it that it's called the loon. Yeah, because my ex-wife just called me a loon.
That's some of the nicer things she said.
She's away. She wouldn't have catched it.
Right.
You loon.
We had Rigetti on yesterday. There's a $10 billion market cap, Jim, with...
I'm sorry, Rigetti?
With, what, $1 million in revenue?
That was Josh. Josh Brown is my absolute favorite. In an interview he did with me and my book, How to Make Money, he said, what do you think of Rigetti? What do you think of spaghetti? I said, I got a dog named Rig. I got a dog named Tony. I mean, we didn't even know where to go there. But, they're managing to lose money at an incredible clip. And if that's the goal, you got to buy the heck out of that. Because they may be the single biggest one that's been disappointing so far. And yet the stock's up. I don't know where this stock was. If we took a look at the stock, where it came from. And this is one where, I don't know,
Yeah.
It doesn't fit. It doesn't fit my, what I did. When we were in the year of magical investing, I said, you know what, I'll take any one of these. Rigatoni, this. Not anymore. You can't, because they didn't even do the numbers. They missed the numbers rather significantly, and we're supposed to stick by Rigetti?
I don't think by that open. 7 minutes. I think the Fed's going to speak in 7 minutes.
It's not golden. 42 down to 35, neutral. Very big losses here. 1.9 million revenue versus 2.17. Remember, million, not billion.
I know, it's with a small M.
Yeah, it's not the B, it's like an N there. But no, I don't want to own Rigetti. That's what a great opportunity. You've owned Rigetti all year. Suddenly you say, you know what? I'm going to look up what Rigetti is, and after that, I'm selling it.
It's interesting to watch you kind of tighten the rivets here.
I have to. Yeah. I have to. I'm seeing too many people. This book tour has really opened my eyes. There are a lot of people who say, I made a lot of money off your Rigetti recommendation. And I'm like,
what are you talking about?
Rigetti. Yeah, no, I didn't recommend Rigetti. Oh, yeah. Yeah, on March 23rd, you said Rigetti in the lightning round. Well, I'm not recommending Rigetti, okay? I'm not. Period. I like On. That's doing well.
Yep.
But I'm not recommending Rigetti. I'm just not.
We're going to get to On and Circle, PayPal, Chevron, a bunch of other news today. Some calls on names like AT&T. Futures do look good here. Dow has a good chance of opening above 48K for the first time. Don't go away.
Order filled.
Order submitted.
At Corient, Wealth management begins and ends with you. We believe the more personal the solution,
Let's dump this for the feds. Let's go.
We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
So you got 50 points, or you just took an L?
Slick-looking goggles/glasses, but I have no idea how to make slick-looking social media stuff. But GoDaddy Hero uses AI to create social content out of thin air, like this one. Walton Goggins goggle glasses are great gifts for all guys and gals. This is a place for the trailblazers, the visionaries, the future builders, equipped with the best tools and connected to the latest tech. We expand the horizon of possibilities. In Singapore, dreamers become doers and disruptors, and the world is our arena of imagination and innovation. This is our home ground.
We're entering a new era, the experience economy, where consumers are choosing moments over materials, reshaping how business gets done. On November 21st, I'll be in Palm Beach Gardens, Florida at the CNBC CEO Council Forum. Join me and a community of growth-minded CEOs, celebrities, and even Rory McIlroy for a front row seat to the conversation shaping the future of business.
To learn more and attend, visit cnbcevents.com/CEO Forum.
Get game day ready with Raising Cane's. Football fans are some of the most dedicated fans in sports. It's a fundamental quality we share, and that fuels every single order of our hand-battered, cooked-to-order chicken fingers. Every crispy, crinkle-cut fry, every slice of buttery Texas toast, and you'll taste it with every dip into our legendary cane sauce. Wherever there's football, there's Raising Cane's. Raising Cane's chicken fingers. One love.
Go Cowboys.
Can still request a payout? Hold on, that's weird.
Welcome back. House members return to Capitol Hill today. In a few hours from now, they're expected to vote on the Senate amended bill to reopen the government and end this shutdown. Let's get to Emily Wilkins with the latest. Hey, Emily.
Hey, Carl. Well, yeah, the House, they're expected to be back to start the process of voting at 4 o'clock today. Final vote's probably not going to come until a little bit later, around 7 o'clock. And these are the final votes needed to reopen the government. Now, of course, exact timing depends on everyone getting back to D.C. This is the first time that the House is going to vote in 54 days, rather. Now, margins are slim. Republicans
So the shutdown's not over. They're just voting on it today.
But at this point, it seems like we're good. They're good for passage. The bill is expected to pass, and it's likely that
Yeah, I thought it was over
last time, there
too.
could actually
That
be
sucks.
a few Democrats that join Republicans in passing that. We did get a preview of the House debate last night when the two top appropriators in the House, Tom Cole and Rosa DeLauro, met with the committee to tee up the vote.
Minority leaders Hakeem Jeffries and Chuck Schumer led their caucus to shut down the government. And for 42 days, the American people have warned of that decision and have been mere pawns at partisan hands of the Democrats.
Premium subsidies, the tax credits. This bill is an empty promise, as is the promise for a vote in the Senate. And as the Speaker said, no guarantee of a vote on premium subsidies in the House.
Once the bill is passed and signed, federal workers are expected to get their paychecks as soon as possible, although, of course, it could take a few days to process those, depending on which areas of the government that they work in. Also happening today, Adelita Grijalva, she was the congresswoman who was elected to serve in that special election in September, will finally be sworn in. Guys?
Emily, if we game out a pass of this bill, it seems like the big silos are: when do we start getting data? When does travel begin to clear? Ed Bastian's here at the big board this morning. And then when do we swear in Rep-elect Grijalva?
So I'll take those in reverse order.
Connection
is
lost.
actually expected to be sworn in at 4 p.m. That time has been set. So she will actually be here to take the vote today. Part of the reason that the margins are going to be as narrow as they are, but again, expecting passage. For airports, that could take a little bit longer. Obviously, you are going to have folks receiving pay. They are being encouraged to come back to work.
There wasn't many good sales for Veteran Days. You know that?
Could take a few more days to sort that one out. And as far as
Black
data,
Friday,
look, there's
yeah.
been some data that's been ready to go now.
I need a
for the
Trading
last
View
40-some
discount
days in
for
terms
Black
of
Friday.
Job reports from September. But as far as other things, a lot of the folks who were collecting the data in the BLS for CPI and jobs numbers, they weren't there. They were furloughed. They weren't collecting things. And so we're going to kind of see exactly when this data does come out. Is it based on retroactive data? I think there are some questions about how accurate it is based on what the format and the data that they have. And some of that could take a little bit longer to get started. But we are expecting to get some more clarity once the government reopens for what will be coming out and when.
Right. Meantime, thanks, Emily. Meantime, Jim, maybe we'll start to pivot to discussions about healthcare. Page one of the Times today looks at the 2 million people CBO says will probably lose their health care in the coming year.
Right, and you see, I always use Centene as the benchmark because it does so much Medicaid that people are taking their numbers down, betting that they won't be able to provide what they were providing. Michael Neidorff, the late Michael Neidorff, who ran Centene, explained to me what can happen if they are not given incentives to write in areas. And there are places around the country that you may not know where the deductible goes to $500,000, and people just have to say, I guess I just don't have the money. Right. And it's a shame. Again, Neidorff was the king of explaining
Are you leaving this week or no?
dangerous this could be for many states.
Nice.
Right.
Hopefully you don't get
we've
canceled.
Talked about flood insurance deserts, maybe eventually mortgage deserts, and in some areas, as you say, maybe health insurance deserts.
Yeah, I mean, I think that you have to go.
4:20 in the morning or afternoon?
But if you go ask your kids,
Okay.
say, and they're in different places around the country, and they don't have health care at their jobs. Well, you know, you have to say you got to get a job with health care. You can't afford. I can't afford to pay it. And people don't understand that. I mean, I've been in that situation. Listen, you got to get one because I cannot afford.
Trade.
And that's America.
Yeah. That's part of the macro concerns, points to some of the sentiment numbers we've seen. We'll talk more about that and how it leads to employment in a minute. We'll get Cramer's Mad Dash countdown to the opening bell with a solid outlook for the open in a few minutes. Don't go anywhere.
At Baird, we have a different slant on global financial advice. That global capabilities mean nothing without personal attention. We have investor relationships in 35 countries and market expertise in over 40 industry verticals, all to help make the most important investment connections of all, yours. Global financial advice with a client-first approach. It's the shape of things to come. Discover the Baird difference at BairdDifference.com.
Behind this advisor is the power of Vanguard's institutional quality bond funds, 90% of which have outperformed their peers over the last 10 years. Are you backed by institutional quality bond funds? Vanguard, discipline that delivers.
What do you do when everything is moving faster than ever? When every turn presents a challenge? You don't guess. You don't hope. You trust. You trust the foundation, the data, the team behind you. Because in a world that's always turning, trust is the traction that allows us to lead.
Every morning, even before
It's
the
so
market's
true,
open,
Filipino
planning my
can
moves
sing.
that I make throughout the day. When you're actively trading, the fees really start to add up, and that eats
Alright, 6
directly
minutes,
into
boys.
your potential returns. I found that Public is really the only platform that offers rebates on your option trades, which help offset those costs. For me, when it comes to investing, timing is everything, and Public allows me to get a step ahead.
What if there was a cruise that felt like no other? A cruise created by foodies, for foodies. One chef for every 10 guests. Every meal prepared to order, and every plate a personal discovery. Welcome to the world of Oceania Cruises. The world's greatest cities and off-the-beaten-path secrets. One memorable bite night and
Dump it, baby. Dump it.
It's
Dump it.
more than a
Let's go.
It's more than a cruise. It's Oceania Cruises.
Why should you trade options rather than stocks? Because they offer higher returns, are cost effective, and can actually reduce risk. Learn how in our new book. Get a free copy today at
Jeremiah song again.
It's not an option.com.
Buy the dip with Pro's best deal of the year. Never miss market-moving news and interviews with 3 global live streams. Go pro at cnbc.com/Pro Black Friday. Terms and restrictions apply.
Take a look at some down gainers. Nike's going to help out on, I guess, Jim, the back of this blowout out of On, too, right?
On was just incredible. They're basically doing the number I expected like in the next quarter. I got to tell you, those guys are so good. Hoffman's so good.
Nice.
No one seems to care. A lot of people short.
Yes.
Big mistake.
Kind of ties with some projections for holiday spending, which is looking pretty decent.
Yeah, I was short. I just got out.
We'll get the opening bell in a few minutes. And don't forget, you can catch us anytime and anywhere. Just listen to it, follow the Squawk on the Street Opening Bell podcast.
Every day, I'm checking the markets throughout the trading session, working the phones, talking to sources to share insights, information, and all of the details that you need to make money.
Closing bell overtime for Eastern and streaming on
Available at Macy's, the fragrance destination.
Okay, man. Oh, we need to vaporize that sore throat with Vapo Cool Drops. It's sore throat relief with a rush of Vicks vapors. Let's go, let's go, let's go!
Vaporize sore throat pain with Vicks Vapo Cool Drops.
When I got there, they have the sushi like
this is Clem.
They're built like sushi, classy. So
Clem's not a morning person.
I'm tasting it.
Or a night person. Or a people person. But he is, and I can solve this in 4 different ways person. And that person is impossible to replace. You need Clem. Clem needs benefits. Work with Principal so we can help you help Clem with a retirement benefits plan that's right for him.
Sure, but I'm confident, you know.
Let our expertise round out yours.
When logic bends, when certainties shatter, when left is right and right is left, which way do you turn? Go beyond the headlines. A trusted global perspective. The Economist. Know which way is up.
Nuveen invests with the foresight and vision to anticipate the needs of future generations. To build strong portfolios that deliver lasting legacies. To innovate and adapt for what's just around the corner. Because after 125 years of yesterdays, Nuveen knows your ultimate stakeholder is tomorrow. Nuveen, invest like the future is watching.
The opening bell is brought to you by Nuveen. Invest like the future is watching.
You got 40 seconds.
One time, not that long ago, Ken Langone, the great investor, when Eli
Bot's
Lilly
too
was
short.
$700 billion, said, Jim, it's going to be.
Oh, you're gonna long it open? You do what you need to do.
$1 trillion in a few weeks. It's at $934 billion.
Order submitted.
In a second, let's go pump it so I can be short. Let's go.
The lowering of price, the idea that you'll just be able to get it for weight loss, not comorbidity. People are beginning to realize maybe this thing is worth far more. And a city piece today, price target $1,500.
Obviously.
Yeah, and Eli Lilly's a great company. Dave Bricks, by the
Yep,
way, the
that
company
dip.
does a
I
lot
knew
of
it.
work.
I
Then
knew
you're
it.
at ALS, you're at a Lou Garba. They're giving money to that. They help the American
Yeah.
Migraine Foundation. Dave Bricks
Oh my gosh. I knew that's gonna. Of course you died. You faded the bot. Oh. Anybody shorted? Have been good. 50 point. Don't fade the bot.
Celebrating its centennial, and Ed Bastian's going to join us at post 9 in the next hour. A lot of questions.
Right. I flew Delta this weekend. We had a plane delay. There couldn't have been more graciousness. They wanted everyone grumpy. I mean, it was like a red-eye time, but look, it's a great airline. It's a storied airline, and it is a storied bin.
That's a good short. Look at that shit. Man, bot is eating.
Yes. And at the NASDAQ, of course, it is AMD, fresh off the analyst day. There's Lisa Su doing the honors, which, Jim, by the way, the immediate reaction to the investor day wasn't all that hot.
No, I think we were in a real funk yesterday, and people didn't necessarily believe that Lisa Su, because she's connected with OpenAI, would be able to get the numbers. But she acquitted herself with some very tough questions by the squawk end. Incredibly well, and I think if you listen, you realize, wait a second, she's well on her way to having some very big numbers. The $1 trillion figure suddenly seems very realistic. Now, she does have to have this big step function, 27, 28. But, you know, I've been a believer in Lisa Su since the stock was at 5. I'm not backing away on that one.
What do you think it says that a name like NVIDIA and a $5 trillion
Yeah, it's going to dip some more.
6%, 3% in a day, back and forth?
I think that it's discouraging because
I bet you a lot of people trying to long getting killed.
And that's wagging the dog.
My buddy just blew his account.
If you believe in any of this stuff, any of the hyperscalers,
He had a 50K Lucid. That motherfucker went long at open.
Lisa Su says that her next generation is good as this current generation.
He's crazy like that.
She looks at a lot of benchmarks before she would ever say that. But NVIDIA is still the one that has to work. It has to. So I think the great hedge against all this is be long NVIDIA. It really is. And the fact that it's
Man, what a dump. Wow.
I wish others were as big, so it wouldn't. It's not happening. We're sticking with the same.
Yeah, that's the 100 points on the bot.
That's a little discouraging. Doesn't mean that they're wrong. Does mean that you better get used to NVIDIA. If it's down a couple of bucks, it's not a good day.
Right. I mean, we talked about B of A and Hartnett at the top. One of the charts, I don't know if they can drag it over, kind of looks at, I guess, manias, Jim, that you'd probably
when do we long? Do we long now?
Order canceled.
Can't short it anymore.
Manias. Right. And then they compare this one to that.
I remember the great shale super cycle, one
I
of
went
the
to
most famous, and then this fracking shale super cycle. I'm going back over Ben Stoto's research record for Mad Money, going back over and looking at American Rascal.
Good shit. You cut that short?
And I don't want anyone who is currently affiliated with, say, using a lot of debt, not having a lot of cash flow, making big claims. I don't want them to be necessarily aligned with Jay Gould, because Jay Gould was more substantive.
Yes. There's a look. This is out of B of A this morning.
Yeah, that's Hartnett. He's made a lot of money for people. That Railway Mania ended real bad.
Yeah.
I know that sounds really early, but it was right here in Wall Street, and it was Jay Gould built himself, was the richest man in America. Building this.
Well, I can't fade a bond this account. This is the account of
I just think you gotta be careful. I never wanted this thing to be, as long as it was fueled with cash.
Order filled. Order filled.
Order submitted.
By the way,
catch this knife. Oh fuck.
It's going to give us additional clues.
Yes.
Stocks close
That's
to
a bad loan.
Yeah, and we own it for the Charitable Trust. It's not expensive, by the way. Now, the last time it was at these levels, it was very expensive. Now you're talking about $19.99, but that's a company that sells at 16 times earnings. It's not.
I'm long at 88, so please pump.
Doesn't blow people
We'll see. And we normally get some good color, qualitative color.
Yeah.
Order filled.
Not touching me long. Too scary.
Someone, he saves his irrational exuberance for the Atlanta Falcons, not for his company.
Why would keep fading the bot?
I mean, I don't know. This Drake London. I would talk up Drake London if I were him. He's having a banner year.
We mentioned
Feds are speaking. Not a Feds.
Cluster there. It's
Yeah.
some Deckers on the move to the upside. I wonder what you think this is telling us.
Most likely.
Well,
I always short when the Fed was speaking, and 80% of the time it works.
Retail until I see better. But FedEx was good yesterday.
FedEx did guide 405 for the holiday quarter. Streets at 402.
That was
better than the
Yeah,
alternative.
don't fade the bot.
UPS wasn't as horrible. I think that the government opening and people feeling better, we're going to get some good spend. I'm in favor of those. That's the kind of stocks. I went retail because they're very low multiple, and I've now decided that it's time to buy these consumer product stocks if you want to yield and you're older. You know, if you can get a 4% good yield that compounds 50s, 60s, 70s, I like that.
Oh, what a
As
pump.
an alternative, one of your 5 stocks might be one of those.
Got out too early.
How deep are you willing to dig into that? Clorox?
Yes.
Procter, Kimberly?
Yeah, I was long at 88.
Kraft Heinz?
No, this has to be a good company. That you got to choose one. And you can say Linda Rendell hasn't necessarily put together a great Clorox portfolio, but that stock could be generational low. I think that Procter is not generational low, but it's real low. Kimberly is generational low.
I want to dip more, so I need a little pump so I can be short, but
I'm going to hold my nose and buy it because Michael Hsu's doing a good job. It's just, again, not for someone who's 20, 30, 40, it doesn't make sense. But if you want yield, we suddenly have it. And I'm not going to say the Fed's going to be cutting rates. I'm going to run away from yield.
Yes, there's a good piece in the Journal on how the Fed is a little more conflicted now in December.
I know, that was a little disconcerting.
There's also a nice piece on the tape about the holiday season for retailers. Tariffs are forcing brands to cut back on Black Friday deals. So the prospect that you won't see as much promotion as you normally do.
Well, it's interesting. One of the reasons why On is doing so well today is they just committed. We're not doing promotion.
Later, buddy.
Promotion. That's very good, by the way, for Dick's.
Yeah, I think I'll end the stream too. So see you guys tomorrow.
At a low price. And I think that Dick's could be the way to play that besides On.